we do need to have another look at how we tackle tax avoidance in the UK. Apart from anything else, the UK tax legislation is, I think I'm correct in saying, the longest in the world, apart from India. And I think one of the reasons for that is the way we've gone about enacting tax legislation in the UK, which is primarily to introduce legislation that hasn't been fully thought through and discussed and hasn't been put into the framework of the tax system that we actually want to have. And then we need lots and lots and lots of different anti-avoidance measures to try and deal with the unforeseen consequences of the legislation that's been enacted. And it is really disappointing that even now, as we heard earlier this morning, 40 new anti-avoidance provisions coming through just this year. It would be better if we had better legislation from the beginning that didn't then need to have all of those patches put on it. Just as an example, there is a discussion ongoing in the context of BEPS and everything else about tax deductibility of interest costs. And do we need an anti-avoidance rule to deal with that? Well, we've already got 7. So if you want to consider whether interest is tax deductible in a multinational business in the UK, you have to work your way through 7 different sets of anti-avoidance principles. It would be an awful lot better if we had a proper discussion about how interest should be treated within a multinational group and end up with a rule that applies to all and cannot be avoided. So that's one reason why I think we should look again. I also agree with quite a lot of the ideas put forward in the tax dodging bill campaign. I think it is absolutely right. Margaret Hodge and I have had this conversation on many occasions. It is absolutely right that government should look again at reliefs and incentives that are given to business to see whether they are actually operating to achieve what they were set out to do, and whether the cost to the taxpayer is worth the incentive that is being given to the business. That should be done. I absolutely believe in increased transparency. From my perspective, country by country reporting, as I've said before, is both inevitable and desirable. I think a lot of businesses believe that as well, but don't underestimate, there is real fear about it. There is fear that the information will be used by people to do harm to the business. My own view is that that's not the case, but there is fear about that. And that takes me to a point about the tax dodging bill. If we're going to move forward, it is absolutely vital that there is trust between business and society and that there is proper dialogue. That trust and dialogue doesn't happen where there's animosity. We've seen how much can be achieved by that dialogue from people like SSE where they have engaged. If we want to move forward, we need more of that engagement. Now, Kerry Stairs, I haven't spotted Kerry. Kerry rightly had a go at the business community at one of our discussions recently about the language that we use and that we come across as being lecturing or talking down to people. And I thought that was a very fair challenge, and it's caused me to reflect about that. But it works the other way too. And the one thing I don't like about the tax dodging bill is that it's called the tax dodging bill. Because amazingly, that actually makes quite a lot of people in the business community feel more afraid. Are they having a go at us? And that's holding people back, I think, from engaging on things like country by country reporting. I also agree that it is important that we should have a look at our international tax agreements and make sure that we haven't entered into agreements, I think inadvertently, that could prejudice the developing countries at the other ends of those agreements. I think Netherlands and Ireland has done that sort of review, and I think we should keep that under review in the UK. So those are all the reasons why I think, yes, we do need to change our approach on avoidance. So what's the other side of the argument? Well, I'm here to tell you, from the clients that I talk to, I honestly believe that tax avoidance, and specifically UK tax avoidance by UK multinationals, is very largely a thing of the past. Why is that? Well, there are lots of reasons contributing to it. One is a much lower UK tax rate means there's simply less incentive to try and avoid the tax. A change to purposive interpretation of legislation has meant that the courts can very easily do down tax planning. Just read the court decisions that are coming out. You're not seeing many cases being found in favour of the taxpayer where avoidance was involved. Then, of course, we've had legislation, particularly the DOTAS and the General Anti-Abuse Rule. I take Richard's point that you could go far further with a full GAR, but actually the GAR Act, somebody explained to me, described to me the other day, as a bit like an electric fence. Nobody wants to go up to touch it. People are wanting to keep well clear of it. And then, of course, the other reason is civil society. Our clients are running businesses that they want to be sustainable businesses. And no tax director in any of the clients that I speak to is going to want to be dragged into the board to explain the press coverage that comes from them having done something inappropriate in relation to tax. Someone asked a question earlier about what is the role of the non-execs. My experience is that increasingly non-execs on boards are very interested in this and are expecting the tax director to be able to come to the board meeting and explain what they're doing. So it's largely down to a lot of the people in this room and to civil society that attitudes have changed to such an extent that in the UK, I think people are starting to self-police. And in a way, that's, to me, a lot more preferable than more and more and more regulation. The challenge, however, I think is more difficult when we think internationally. Firstly, I don't think it is right for the UK to introduce tax rules that tax overseas profits of UK multinationals, where those profits are genuinely earned overseas. If we're going to move to a principle that says we tax where the economic activity is based, then the UK should tax the economic activity here and leave other countries, especially developing countries, to tax the economic activity where it lies. I don't see that it helps anyone by us taxing that more. And the second thing is, it is amazing how different cultures are on this subject of tax. We tend to sit here in our sort of Western European view of how the world operates, and it's not universal. There's quite a lot of press coverage in the United States the other day from a left-wing think tank saying how evil BEPS is, because basically it's an attack by Europe on jobs in the United States. So if we really want to make a difference, we are going to have to focus on the international side of things. We do need to start taking account of some of those cultural differences, but see if we can work towards a world where not only do we all obey the rules, but the rules all add up together to give us the right answer. At the moment, the best chance of doing that is BEPS. BEPS doesn't solve all of the problems, but let's at least take the next few steps. Thanks very much.